Welcome, Angelo. This is our first investor insight videos that we're now producing for clients.
Yep.
And mate, it's been 18 months, coming up to 2 years since we first met. This is just a bit of an update because a lot of water passed under the bridge in the last couple of years with both the Hospitality Fund and also the Varsity Lakes, which we'll talk about in a minute. But 8.5%, my clients are very happy. Every quarter it's coming in. Is that likely to increase at all?
Yeah, look, we do see an improvement in the distribution yield. We do have excess earnings out of the 4 assets we've acquired so far. We're having a meeting next week to determine what our distribution yield will be for next year. And there may well be an opportunity to pay a special distribution depending on how we want to treat the excess earnings that we've received so far.
And those excess earnings have come from the fact that we've had obviously rental increases in the various locations, but also the operational profits have been good since you got hold of Dubbo.
Yes, so we've got 4 assets as a bit of a recap. The Seabill Hotel is an operating asset that we have Acure managing on our behalf, so we meet with them monthly, and that's performed extremely well. We bought that on an 8.8% return at the time. 2 years ago on 18 million, it's now generating about 10.5%. So it's had good earnings. Room rate averages have jumped from 209 a night to 240.
Right.
And occupancy's been pretty steady in the mid-70s. So that's going well and improving. As well as that, we've got a very large restaurant underneath there. And that's been performing extremely well too. So our base rent does have a turnover target over and above. Base rent has been around 360. But we've received about 570,000 of rent last year with the turnover. So both of those components of the Seabill are performing well. Fremantle and Dubbo are both leases, so we get fixed increases each year there. So they're long leases. It's 3.5% at Dubbo and 4% at Fremantle at this point.
That 3.5% rental increase?
Yep.
Right, okay.
That's a rental increase each year.
Each year, 3.5%, I like that.
Yeah.
Totally like that. Economically, with the economics, the interest rates fluctuation, CPI fluctuation, Mr. Trump and everything else that's happening on the planet, you know, people get a little bit nervous about what the hell's happening. But the beauty thing I like about this is that it is uncorrelated to the Australian stock market.
Correct, and it's certainly uncorrelated to Donald Trump and his antics. So I think it's a good time to own commercial real estate in Australia. You won't see the fluctuations of value like you see in the equity market with property. And people are still paying the rent. They're still going to visit our hotels. So, life goes on.
Let us know about any special distribution and any increases. We'll love to do that. Thank you very much for coming all the way from Perth to see us over here in sunny Chatswood and look forward to the next project.
Thank you, Wayne. Thanks for your support today.
Thank you, Angelo.
Thank you.